I've been in crypto since 2012. I've made millions and I've lost millions. Now I focus on just one thing: stable, high-yield returns with minimal risk. No hype, just smart, capital-preserving strategies that beat the market week after week. I'm the stable lad. Let's get into it. A quick disclaimer before we move on. This video is for educational and entertainment purposes only. Nothing shared is financial advice. I am not a licensed advisor. Always do your own research and consult a professional before investing.
I wanted to make a quick video about one of my favorite tools that I use to find stablecoin yield in DeFi. And it's this website, DeFillama, which you could use to find all different types of yield opportunities within the DeFi ecosystem on basically every single layer 1 blockchain and every layer 2 blockchain. But I'm going to use this video to quickly kind of show you how I use it just to find stablecoin yields. So we go to DeFillama.com. We'll come down here over to this yield section here, and we're going to go down here to stablecoin pools. So again, here yields, and then you have this whole thing: pools, delta, neutral, long, short strats, leverage lending, etc. I'm just going to go right here to stablecoin pools, and this is kind of just my go-to for where I find these kinds of things. And DeFillama is not the best, but it's really good, and it's a place where you can kind of see a lot of data in one spot. And you can you can sort of filter this however you kind of want, right? You could filter it by chains. If you only want to look at Ethereum, you can go over here to chains and only look at Ethereum. And you click over here, you can look at the highest APY yields. You can look at the base APY, Reward APY, which is generally when a protocol is giving its own token as a reward, usually on top of the base. So you can take a look. Here's the highest base pay, which is UniSwap. This this pool combination of USDE and USDT has $3.3 million in total value, which is really good. I mean, that means it's a well-funded pool in Uniswap. It pays 45.76% at the moment, and that's the base. There's no rewards, which means Uniswap isn't giving you a Uni token. It's actually paying you out in these two tokens. It's paying you in USDE and USDT. That's really, really good. But you can also see here this 30-day average supply is 7.76%, which is not really that great on a 30-day average. So it may be high right now, meaning there's a lot of sort of volume and a lot of activity between these two assets, and that may sort of disappear over time, and it may kind of go back down to this 7% or even lower than that. So anyway, just sort of gives you a sort of snapshot example. You can take a look at Solana. You can take a look at here's an interesting one. It's USDC only on a project called Save, which I've never heard of. It's on the Solana blockchain, and it has $10,000 in it. So maybe paying 26%, and that looks really, really great, but it's got $10,000 in it. That's not a lot. It looks like a super high risk thing that I wouldn't even consider trusting. But here's how I kind of look at things. So you can take a look at what's on the base blockchain, and again, you can kind of just do the same thing here. Take a look at the APY. Take a look at the base APY. Take a look at, if you like Reward APY, you can take a look at Reward APY and see like what the highest Reward APY is. Sometimes those are really, really cool things where you've got a protocol that is really, really trying to grow really quickly. And so they're really incentivizing you to put assets in the protocol, and they're paying out a lot of money for it. You can get super high APYs with those. I generally, if I do those, I sell them really, really quickly because I don't like volatile assets. The whole point of this is to stay stable. So but here's just kind of basically how I look at it. Now, if you want to kind of go here, you can clear everything. And sometimes it does that. You just gotta go refresh the page, and you go back to here. Now, you can also take a look at by projects. So, for example, right? So these are projects. You can take a look at what's on Lido. You can take a look at what's on Athena. You can take a look at these specific projects. Morpho Blue is a popular protocol that has pretty decent APYs, and you can see it here. If you did want to just look at Morpho Blue, you could see by chain. You can see here, here's something on base. If you keep scrolling down, it's mostly base and Ethereum. So it's just really interesting. You can kind of take a look at it from that perspective. We can clear those as well. Let's refresh this page. And then you can also take a look at things by tokens. So say, for example, you only hold USDC. Let's just say, for example, you only want to hold USDC in your portfolio because you think it's the safest stablecoin token. You just don't want to mess with any other tokens. You don't care to mess with some of the more risky tokens. You can look only on USDC here. And then you can search by APY. You can search on the blockchain. So you can see, hey, here's USDC and CADC. I don't know what that is. Maybe like a Canadian coin or something like that. You can see the TVL. Again, just take a look at all these things. It's really interesting. Here's an interesting one. Peapods, 73,000, 146%, right? SushiSwap, USDC and USDT. It's a stablecoin pool. It's on the Arbitrum blockchain. It's got 180,000, which is not horrible in there, and it's paying really, really high amount, 57.16%. That might be something to look into. Now, the thing that so I use DeFillama just to kind of get a really, really good idea of what's available out there. You can take a look. Sometimes I look for USDC and I look on the chain. Like I only care about what's on Arbitrum, right? It's because I'm trying to like maybe deploy it. Maybe I have $1,000, $10,000 on Arbitrum that I'm trying to deploy, and I'm trying to look at what's available. So here we've got two different SushiSwap. SushiSwap is a competitor to Uniswap, and it's got two stablecoin pools that are paying out really, really nice percentage. It's not a ton of value in those chains. The 200,000 is not a huge amount of volume in it, but it's pretty good for a competitor to Uniswap, which is smaller. It's paying 39% here, 57% here, and the 30-day average is really, really high. That's super enticing. Even if it doesn't last, and I'm deploying $1,000 on Arbitrum, like even if it's only even if this APY only lasts for 15 days, 10 days, like that's still really, really solid, even if it goes down or fluctuates. But the thing that you want to kind of do is once you sort of stake these types of things out is you want to check to see if they're actually accurate. And you can generally do that by clicking this arrow. It'll take you to SushiSwap page. You'll go here and you kind of see what's going on here. And you can see here, USDC and USDT, the APY it's showing here is 9.83%, which is so much less than what we saw on DeFillama, right? We saw on DeFillama there was 57% with an average of 181%. So a lot of times DeFillama just gets the things wrong, or it's just not perfectly up to date and accurate. So you always want to go to the website itself and check. 9.83% is still really good for for a stablecoin pool. This is a stablecoin pool of two stablecoins, USDC and USDT, that are really stable. They're the two biggest stablecoins in the world. And I'll do deep dives on all the stablecoins on this channel at some point. But these are two of the biggest ones. In terms of losing or fluctuating in value, they generally don't. They stick to that stable $1 per coin. And there are fees to earn here. So you could take a look at here. Here are the fees to earn on June 28th. There was 351 earned. And then you have these weird days where like there's hardly anything earned. $53 for the entire pool earned on July 7th. So there's something going on here where there's a spike of activity in this pool, and now it's kind of slowing down and dying. So you may kind of just look at this and go, I don't know. I don't really think this is the pool for me. But again, this is why I use DeFillama. I'd love to just sort of check these things out. This is a slightly larger pool, DAI and USDC. These are also two large stablecoins. And you can see here that the APR on this website is very different. It's 6% versus the 37-something% that we saw on DeFillama. And again, you can kind of see these weird spikes where you have these big days where there's a lot of money earned on these pools, 255, and then zero for $3.46, or $17 earned on this one. So again, this is just sort of how I kind of look and think about some of these potential options. The other thing you want to take a look at on a lot of these types of pools is sometimes they don't even exist anymore. Like you can look at something like Harmonix exists. You take a look at the fees. You can see, hey, look, the APY is 21%. It's a 15-day APY, so it's actually quite high APY. And you take a look at that and you kind of take a look at, you see, if it's really good. But some of these things you'll see that are really, really small, they might not even exist anymore. A lot of these pools are disappearing, meaning like if they don't have enough volume, the protocol starts shutting it down. Some of them make deals and they migrate to other protocols. So you just really want to be careful. I use DeFillama just as a sort of basis to get an idea of where I want to deploy. If I have 10 grand that I want to deploy on the Arbitrum blockchain, it's really easy for me to come and see what's available on Arbitrum. You can take a look at, all stablecoin pools. You can look at, hey, look, Fluid, which is basically a grade A protocol for me. It's got USDC pool, which is a huge amount of value locked in. It's $30 million pool. And you can take a look at Fluid is giving, they're incentivizing people to use this pool. They're paying 4.5%, almost 4.5%. So the APY is 8.77%. It's a super low risk play. And I may go like, dang, that's like a super low risk play for me. I'm going to put, if I have $1,000, I'm going to put $500 over here and I'm going to make 8.7% on half of my portfolio with doing nothing and not worry about any sort of risk whatsoever. And then I can play with some higher risk protocols like maybe Harmonix and earn 13.7%. Or I can play around with some of these other ones and earn a higher percentage that might be like slightly higher risk, like Peapods, which is kind of a newer one that's doing really, really well. It's got $4 million in it. I could go to Peapods and be like, okay, this is really, really cool. Here I've got, I can lend my USDC and I'm earning almost 20% on it. So I got 8% with my Fluid account at super low risk Fluid. And then I can try this newer thing called Peapods and earn 20%. And you take a look here, this platform is all new, right? It tells you right here, there's risk to using these things. It's a brand new protocol. There could be hacks, there could be all kinds of things. And so I would like, I would be like, hey, what percentage of my portfolio would I be okay losing in this? And it's probably under 5%. So I'm maybe if I have a $10,000 portfolio, that's not a lot that I'm risking there. But again, that's just sort of how I start to think about using this tool as DeFillama. It's like, and how I start to think about what I want to do on my overall portfolio. I will have future videos about how I actually design my portfolio, how I spread the risk out, how I use a combination of the Half-Kelly criterion and modern portfolio theory, which I just think really sort of lends itself really well to stablecoins because you're not getting the crazy gains and you don't have the crazy volatility that you would by investing just in the crypto market. In general, you're using stablecoins, and so you want stable yields. And so I think that criteria works really well, and I'll kind of go into depth in future videos to explain why I think that's a good way to design a portfolio. But in general, this is how I use DeFillama just to get ideas about what I want to do, which chains I might want to use. And again, I'm going to go into depth too on future videos about which chains to use, right? There's a whole argument that you only want to use chains like Arbitrum and Base, Solana, Avalanche, Polygon, all these other chains, and that you don't want to use Ethereum because Ethereum is so darn expensive to use. But if you have a ton of money, Ethereum is best in class. It'll have the deepest pools. It'll have the most volume locked in these assets. It'll have the biggest opportunities on these, and it'll be a lot more stable. But they're expensive to use. So anyway, this is how I use DeFillama. I'm going to do future videos on tons of these things. If you want to stay involved in the channel and you want to learn more about how I invest in stablecoins, how I think it's really just an absolutely incredible opportunity. You can make money in any market, whether the crypto markets go up or down, whether there are tariffs, whether the stock markets go up or down, or the real estate markets go up or down. It doesn't matter. I'm earning 10, 12, 15% average APY, staying stable, and just doing stuff like this where I find really interesting places to put my capital and cash, and I earn money while I sleep.
I'm the Stable Lad, and if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.